All right, hello and welcome, traders. It is Monday, September 30th, 2024, last day of the month of September. Good month for us, good month overall trading. Lazy Trader account, new all-time high again today. Great stuff going on in both the Income Navigator and the Lazy Trader accounts. So pretty excited with where we're going. I want to share some stuff with you tonight, though. I've got 11 trades to share with you, 11 trade ideas that I want to put out to you. I was going to put this off. I was going to do it in the morning, but I thought, you know what? Let's do it tonight. I'll get this done before Monday Night Football tonight, so you guys can sit and watch, play a little bit on your charts and take a look at what's going on in the world. But everything's turned upside down a little bit with this whole China stimulus thing, and it has really turned a bunch of things on their heads right now. And you're seeing some pretty cool stuff happening out there. Is it going to last? Is it real? I say no to both of those, but at least for now, we're going to take advantage of this thing. Most of the time, anything the Chinese government's doing is probably A, not going to work out, B, it's all for show, and C, they'll just change their minds somewhere down the road and manipulate stuff anyway. So I don't trust anything that they're doing over there. However, you can't turn a blind eye to the stimulus and see what's going on. So a couple things are being affected significantly right now is if you think that China is going to be pumping stimulus into its economy, which is by the second largest economy in the world. Okay, you've got the U.S. number one by a good amount. You've got China number two by a large amount. Okay, and then 3, 4, 5, 6, 7, 8, 9. You add all of those together, they don't even equal China or the U.S. So it's the U.S., it's China, and it's nobody else in the world. So really, those are the two major powers when it comes to largest economies on the planet. So when China does something positive, which isn't that too often, okay, you got to pay some attention to it. So what can happen if China's stimulus just starts going? Well, I think number one, almost every commodity out there immediately should start to see some bumps. We're going to take a look at some of them today. But you had oil going up today. You had copper moving up today. You had soybeans is down a fraction today. Wheat was up. Okay, why soybeans? So what the heck does that have to do? Well, when the second largest economy in the world starts to cook a little bit, they're going to need soybeans. Number one, they have a huge livestock and agricultural system that they've got to feed the livestock, number one. And number two, China makes a ton of soybean oil, so they need soybeans to make that oil. They need copper for technology purposes, so they're going to need to be buying copper. They're going to consume more oil, even though oil's at a low, and we've got all kinds of stuff going on with oil right now. I think that can certainly help out with that. So, yeah, and the Aussie dollar is benefiting because of it, because you got stimulus over there in that part of the world. That's going to bleed over into the Australian realm as well. So the Aussie dollar, unfortunately for us, because we had a strangle, keeps pushing a little bit higher. However, if you're in that thing with some longer term or long plays, whether it's a 1-1-2 trade, naked puts, put credit spread, whatever you have in the Aussie dollar, you're making some bank right now on that. So all, you got to pay attention to what they're doing. When the second largest economy wakes up for a few weeks or a few days, you got to pay a little bit of attention to it. Interesting stuff. We'll keep an eye on that. But I want to share some charts with you today. I told you I got 11 trades to share. Stick with me, and I'm going to get through them all with you. Before I do that, let's just take a look and see what the fear and greed index is doing, because right now you're seeing that that as of today ticked into the extreme greed category. So we went from greed to extreme greed. So a month ago, a week ago, it was all about extreme greed or about greed, and now it's extreme greed. We are overdone a bit potentially to the upside, but doesn't mean we can't keep going higher a bit. But we are now in the extreme greed, which means, as I have been saying over and over and over to everybody, I am bullish, but I am cautious. Okay? I'm really nervous about the election. I really don't want to have, I just think the volatility right immediately after the election will be crazy. I don't want to be overexposed here. I'm not even sure it matters who wins. I think there's a lot of volatility in play. I think one candidate probably has more volatility attached to them than the other one, but either way, and I'm not being political here at all, but either way, I think there's some potential craziness that's going to happen. And then I think once that's over, I think we can continue to move higher. I just don't want to be overexposed to the S&P 500 leading into that. However, I've seen so many great deals out there and so many opportunities right now as we're heading into this. And the last thing I wanted to touch base on, and I will share it here with you, and then we'll get into the stock. So fear and greed is hitting extreme greed. Caution is advised. Okay, just you heard it here. Caution's advised. It doesn't mean we're crashing. The world's going to end tomorrow. Caution is advised. Okay, but then I still think we end up the year higher. All right, taking a look to one of my favorite charts out there is the put-call ratio. Now, typically when they put call ratio, and I'm looking at specifically the 10-day moving average of the put-call ratio, okay, when it's rising, the market's typically falling. Okay, when it's falling, the market's typically rising. So the longer it falls, the more the market rises. Okay, when it gets to this oversold area here below 0.7, well, that's where I think it starts to get interesting, that you're starting to potentially any move higher there can lead to some market selling. Now, does that market sell-off mean we're going to go down 5%, maybe 10%? Fine. I don't think we're talking 20 or 30%. So this is not sounding the alarm and go get your black swan hedges on. No, don't do that. Okay, just be cautious, lighten up. Okay, but continue to trade and trade yourself into the election as well, and just be prepared to take advantage of anything that happens. We could get just a blistering rock and roll rally coming up here, and I think you got to be positioned to take care of that, but you got to be safe. Now, we have been falling on the 10-day moving average here, and now we're getting into this oversold region. Now we can continue to go down a little bit further. So I think, the more calls that are getting bought in here is going to obviously change this ratio a bit. Once we get to a spot where we're, really overdone and we start to move up, then I think that's where you've got to watch the markets. Last thing I wanted to take a quick look at here was if we're looking at the S&P 500 futures, okay, on the weekly, okay, you've got a definite, even though we hit a new high last week, we have not hit it this week, but we're doggone close, up in here. But look at where RSI is, more recently. Okay, high here, okay. Another high here on it, which is a lower high on RSI, and then yet another new high here on even a lower RSI. An absolute RSI divergence that's happening on the weekly chart. I think, again, that makes me cautious. Doesn't mean we can't keep rising. I mean, RSI is rising on the weekly, as is MACD, as is the squeeze indicator, okay, and you're moving higher. Does that mean, so, Tom, what are you telling me? I'm telling you bullish, but cautious. Okay, don't go hog wild. That being said, okay, I want to share some stocks and some futures with you. So let's take a look, and we're going to switch over to the view here on TradingView. So let's look at TradingView, and I'm using this because I can get a few more data points in here than I can get on my toss charts. So I hope you can see this and it looks well. Let me get my fixture off the screen. Okay, and here we go. Let's get ready. Let's get into 11 stock ideas. And you know what? I know Coterra is up here, but that's not the one I really want to start with. So we're going to start in here with Oxy. Now, why Oxy? I mean, this has just had a painful sell-off here on the weekly chart. Just a painful sell-off since April of this year. Just a painful sell-off for a stock, that's great. And I believe Warren Buffett's average position is around 56, and we're sitting here around 51. Okay. But if we look over here on the daily chart, this to me looks like a potential double bottom may be in, right? So we are, we hit the, hit a low here, bounced, came down, hit roughly the same low, and now we've bounced off of it 2 decent days in a row with 2 good volume days. RSI is rising, MACD is rising as well. You're seeing us oversold on RSI on the weekly and starting to come out of it, as well as MACD reversing on the weekly. I like Oxy here. It's one of the names that I want to be in. So how am I trading that right now? I am looking at leaps, okay, or for sure, just naked puts. So I may use the word leaps, but let's just say naked puts on Oxy. And I'm okay getting assigned here if need be, if we start to play some things down here, because I like the stock here. And if I can get in at a better average price than Warren Buffett, I feel pretty doggone good. All right, so Oxy is number 1 on the list. That also portends that, okay, our energy price is going up. So let's take a look at oil in here. So I'm going to cover stuff from both the Lazy Trader portfolio, which is more of a stock-based portfolio where we're selling naked puts, writing covered calls. If those puts get assigned, we write calls on them. We've also got a SPY leap put campaign going on in there. That's our primary trading style, premium selling in that Lazy Trader account, typically longer term trading a bit. Even the covered calls are 30 days out. So nothing, that's super active trading. In the main income navigator account that I have, that is primarily a futures and a indexes trading platform where CL fits in perfectly. Now, oil has been in this also a super downtrend, really all the way from September of last year, from the 90s, okay, all the way down to where we are today, sitting around 68 or so. But this also looks to be putting in somewhat of a double bottom overall here. We'll see if that makes sense. We could also be putting in a bit of an inverse head and shoulders, potentially with a neckline somewhere along these lines in here. We'll see if that materializes, but overall, I know there's all kinds of stuff out there with, the Saudis and price cuts. And if we look at, any of the news that's out there, largest quarterly loss is 2023, third monthly loss in a row, giving back the gains on it. So I think if you're looking at oil, the news has not been great. You're looking at potentially the Saudis don't want it. Nobody wants to cut production. Everybody wants to pump oil. Drill, baby, drill, as Trump says. So everybody's drilling. Okay. It's not just the U.S. The U.S. is cranking out oil. Okay. You got the Saudis cranking out oil. You got Russia cranking out oil. You got Venezuela cranking out oil. Everybody's pumping oil right now. And the demand is drying up a tad. So demand is not as strong as forecasted. Okay. And when demand is not as strong and the supply continues to crank, you're going to have this reduction in prices. However, if the China stimulus starts to kick in and the second largest economy in the world starts cooking again, maybe, okay, that would put some more demand into oil potentially. So let's see what happens. Also, Israel's now, attacking into Lebanon. So you got Israel with Gaza, you got Israel with Lebanon, you got Iran rattling their sabers again, calling the U.S. liars and everything because the ceasefire never happened. And now you got some rockets flying in Baghdad now. All kinds of crazy stuff happening in the Middle East. I also think that puts a little bit of a bid underneath oil. So again, doesn't mean it can't go lower, but I do like oil here. It is my largest position of anything that we have by almost 50% larger than the S&P 500 positions that I have on right now. Okay, so oil, my number one largest position. I like Oxy as well. You could probably look at ExxonMobil and some others out there, but I like oil in here. I think you can play it, uh, here to the upside. All right, let's take a look at bonds now. Bonds have been, something that I'm super bullish on, have been super bullish. I think with the Fed rate cuts coming. Now, Powell reiterated 50 basis point cuts the rest of this year. You would assume that that would be 25 and 25. We were looking at 50 and 25 up till a couple of days ago, and now it's kind of skewed itself to, 25, 25 or 25, 50, something like that. But still, if the Fed is cutting, which I think is bananas, but they're going to do it anyway. I don't think inflation is under control the way they think it is. We'll see what the unemployment report this week is a monstrous employment report on Friday. We're going to have to keep paying some attention to that. However, I like bonds. A, flight to safety, bonds. B, Fed keeps cutting interest rates. The long end of the curve on the bonds, the 30, which I'm looking at here, the 20, the 30-year, I think those benefit still, because as the shorter term portion of bonds lose their rate and lose the luster of, why invest in those things if the rates are coming down, but the rates on the 20 and the 30 may be holding up there a bit more, but I still think they'll come down slower, but come down, which means I think you get a bid under bonds still. So I like where we are on the weekly. You've got a nice uptrend going. Yes, you're losing a little bit of momentum. We've pulled back to this uptrend line, but you've got momentum that's not even hit the 21-day moving average on the weekly. We still could come down further and still hit the 50 or the 21. I think those are great. Now, if we're looking over here on the daily chart, okay, you've got RSI and MACD starting to, recover a bit. Okay. You've got, the 21 still above the 50. We tagged the 50. We're trying to bounce off of it. A little bit of a down day overall here, but not, I think oil decent, or I'm sorry, bonds, not oil. Bonds, a little bit of a down day today, but I think that's totally fine. Big day on Friday, a little bit of a Harami pattern going on here. So I do like bonds. I like where we are. I want to be long bonds. I want to be long bonds, the 30-day. So I think you can be trading bond futures. I think that also dovetails us into some of the other things that I want to take a look at, which would be number one, TLT. Okay, I want to be in TLT. Okay? I want to use the same opportunity, not only on the futures in the Income Navigator account, but I think we're going to keep selling bond naked puts in the Lazy Trader account. So I think it fits perfectly in line with what we're doing there. Okay. So overall, decent uptrend. We've already covered bonds, so I don't have to cover the 20-year here with you on TLT, but I do like TLT. I think we're fine. I think it's a good positioning here, heading down towards this bottom of the Bollinger Band. I know there's a lot of stuff on the screen, but bottom of the Bollinger Band, this little green area here, not too shabby. That's where the 50 is. That's also where this anchor-weighted VWAP is, dating all the way back to this particular low. So support potentially for bonds in here. So not only do I like TLT here, okay, but I like TMF here as well. Okay. I have TLT, Leap Puts. I'll probably put another one on tomorrow. I'm also sitting on TMF. I actually own the shares of TMF here. Nice uptrend. Okay, here on the weekly. Okay. The 21 is starting to catch up to the 50. So I like this overall. I think this pullback is super helpful and healthy. I like where we are. We're down towards the bottom of the Bollinger Band, as we saw on TLT here, holding the 50 moving average here. Overall, I like this weakness in TMF. I think it gives you an opportunity to get in. I think getting in on these moves here was way premature for many people. We've only been in this a short period of time. I like the opportunity on TMF here. What I am doing is I am buying shares of TMF. Now you can sell puts in it. So you could sell naked puts in it, but I'm also writing covered calls on this as well. So I'm giving myself both the opportunity. And even at my oil shares, I have sold naked puts everywhere in oil that I have naked calls right now. So I'm getting the benefit of, yeah, we could potentially rise, but if we don't, we just stay stagnant or we rise just a little bit, I'm in good shape. So I really like this. So there we go. We got Oxy, we got oil, and then we got bonds here. And you can play it however you like. ZB if you're in the futures, which I am, or TMF and TLT for the stocks, which I am also in the account. So I like what we're seeing there. All right, let's get into some other stocks and take a look at what's going on out there. So Google has left this big gap up ahead here, pulled down, bottomed out, weekly wise back in here, hit some, they also had this descending wedge that you can see on the weekly. That descending wedge was broken out 3 weeks ago, little indecision last week, and then we're off to the races today. I like Google. We're in Google. We're sitting on leap puts in here. I would want to add more potentially. So I love where Google is. You've got the 21 heading up towards the 50. You got the 13 breaking the 21. I think if you can get in right around the 50 here, okay, I don't think this is too shabby of an opportunity. I think this is a great spot on Google. Yeah, not oversold, just moving up on the RSI. I think Google, perfect opportunity right now to get in. We alerted everybody yesterday on that in the Discord that Google was an opportunity, as well as Oxy, as well as bonds. So we have given everybody an opportunity there. All right, another one that I alerted members of, and I want to cover it. And so you can see that it's the Schwab dividend equity. Why in the world, Tom, are you trading this thing? Well, for a couple of reasons. Number one, if rates are coming down, our bill shares are going to be less effective at some point. Okay, probably faster than others. I am looking for other things. Now, SVOL is another one, so we'll talk about SVOL as well. But I think this is an opportunity here. This thing is a great looking chart. Okay. Moving up, bullish on all ends. We alerted members on this today at about 3:43 or so. I put out a note to members on SCHD in here. I'm actually looking on this one. I was looking at a naked put trade about 45 days out. If I'm assigned, I would be fine with that. I'll just collect dividends and then write covered calls against it. So I think that's another good play, especially if we're heading into maybe some volatility or some other things here. I like the stability of something like this that's been working its way higher. Okay, that I can sell covered calls on. It's going to pay me a dividend at the same time. So that's number 5 on the trading block. SVOL is another one. This is the next up on the list. So SVOL today, slight up day, but you've had a nice pullback. Distribution went out. Okay, but I think SVOL is another nice way to play the income game. And for me, it's just buying the shares. Okay, you don't get the opportunity to buy under 22 very often, and right now you're at 21.99. So I want to be in SVOL here, especially if volatility increases, okay, heading into the election and others. I think you're going to get better opportunities. And you can see back here, if you get some big spikes like we did, back here on that August 5th day, I mean, big moves to the downside where you can get in the low, 21 to 20 range. Okay. If we get another spike like that, I will definitely add more shares, but I am taking winnings from our winning trades and I am putting them into SVOL here, and then my SCHD, we got those going on. All right, let's take a look at another stock here that I really like. That is Lilly. Okay, why Lilly? Taking a look here at the weekly chart, this thing's been coming down nicely, dropping from about 980 all the way to 80, down 100 points to the 21 moving average. So right in the middle of its Bollinger Bands and right at the 21 EMA. And then if you look at the daily, it's even further down. It's actually broken the lower Bollinger Band, okay, and the 50. This is a great company. I think you're getting an opportunity to get in right here. So I am looking at Lilly primarily right now just for some naked puts. If we would get assigned or something, that would be fine. But I would be taking a look at naked puts. We'll be specific on this trade tomorrow with members of what we're doing. But I like where we are. I think you can sell something underneath this 3 ATR white band that you have. You've broken the Bollinger Band here. I think this is a good opportunity to start to nibble away at Eli Lilly here. So I think there's a good stock. So there's number 6. Number 7, Mr. Softy. Okay, Microsoft. Those of you that never heard Mr. Softy, welcome to the 90s. Welcome to Jim Cramer and the Street in 1990. But anyway, this is Microsoft here. Nice pullback. Okay, nice rebound. Okay, breaking above all of these volume-weighted average price, all these VWAPs. It's holding that just fantastic here on the weekly, even though it's a bit weak and selling off a bit. Okay, I like the opportunities here. And then you've also got the 21 breaking above the 50, the 13 ahead of that. We held that today. Now, it looks like in the after hours, we're going to be a little bit lower. So tomorrow, we're going to get a better opportunity to get in. There's definitely some weakness here. However, I love the candle today. We'll see what happens tomorrow if we can get any more upside out of this. But I think Microsoft is giving you some opportunity to sell some naked puts in Microsoft. Now, I'm going to talk to you about NVIDIA, which is a stock that I love. Oops, not NDVA. It's NVDA, typing too quickly. So I like NVIDIA. I mean, this thing has just been on a parabolic rise. Great stock. We all know that in here. But what I want to really focus on is a different way to play this necessarily. So let's take a quick look at NVIDIA here. It's really essentially gone nowhere now since June. So since June, up a little, down a little, up a little, down a little. It's actually forming a pretty tight little symmetrical triangle. Okay. So this symmetrical triangle that we're seeing here, it's going to break one way or the other. Which way is it going to go? Well, you tell me, but I like where it is right now. I think it's giving you an opportunity where you're around here in the 21-day and the 50-day moving average on the daily chart. I think that's a great a good opportunity right now. Any other weakness in here, I think gives us a chance to get in to NVIDIA selling naked puts. I'm also going to be looking at NVDL. Okay, this is the 2x long on NVIDIA. So this is a little more volatile if you have the temperament for it. But NVDL, I think, is giving you an opportunity here. Same exact setup. Obviously, it's going to be following what NVIDIA is doing. Okay, so we're looking at the same basic setups going on here, okay, for this thing to potentially break out to the upside. I like where NVIDIA sits in here. I think you're getting an opportunity to get in. It's off of its highs around 90 all the way down in here, right around this 58.60 level. I think you're getting a good opportunity. This would be an opportunity, I think, to play in naked puts, short term, potentially get assigned and start selling covered calls on it. Or you could do the poor man's covered call, or you could simply be putting in put credit spreads. A lot of ways to play this, but I like NVDL. So that's number 8, NVIDIA or NVDL. I think looks interesting here. Let's crank. We got 2 more to go. Tesla is the next one. Tesla on an absolute tear, moving back up to these previous highs that we had back in here. Certainly. Okay. Certainly you can see, the previous highs that we had. Maybe we can move this up just a fraction. There, we're almost at those. Tesla's been cranking its way here. You've got the autonomous driving stuff coming out in October, maybe the 10th, I believe. We'll see how that goes. That could tank or, create a pretty good bull run on this thing. But if you're looking at this uptrend line and you're looking at some resistance up here, now this thing had a nice ascending triangle here that we broke through, and now we're off and running again. This was that previous ascending triangle that we had going on. We broke out of that, made a new run up here. Tesla, though, approaching these previous highs, but I mean, we're nowhere near the previous highs back here of around 400 or so. But I think we get moving here, and I don't think the 300s are way out of the realm for Tesla if we can get through this resistance in here. I would love to see some sort of a pullback first. Don't know if we're going to get that, but either way, I think any pullback close to this 21-day moving average, which would also be closer to these previous resistance flip to support level. Now, I think these are good opportunities. I think Tesla is something to watch here. Not the best setup yet, but I think it's good to watch. All right, Merck. Why in the heck Merck? Well, we've played this before as a poor man's covered call, and I'm looking to do it again. Okay, Merck is back down to this area where we have found, support previously. I don't even know where the best place to draw this out is. Here, let's just draw this line. So, pretty nice area here. We can even bring this back a tad more. Okay, and draw this over. So previously, this is where we hit support, resistance, support, 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 pretty much support, okay, and maybe potentially support again with a fantastic looking dragonfly doji or doji pattern here today. Not exactly the dragonfly doji, but a pretty good doji pattern. Could signal a reverse to the upside on this thing. Let's keep an eye on where Merck is, but I like Merck here as a kind of a low risk, high reward play. I think you could do a poor man's covered call on it. I would be fine with a put credit spread on Merck as well. And then finally, number 11. I know this is probably too many. I should be doing 3 or something for you. I'm giving you 11 trade ideas. Adobe. Let's take a look at Adobe and why I think Adobe here is something to take a look at. And this, let's, oops, I did not mean to grab that. Let's grab the rectangle. And we have a massive gap to fill on Adobe. Okay, massive gap fill to be had. Now, Adobe also looks to potentially on the daily here to be getting close to a double bottom. Now, MACD has been improving on the daily, and RSI has been hanging in there, a little bit of a recent improvement on it. But I like here on the weekly, I love the fact that, it's been weak and been bearish, okay? And you're below the 50, but the 21 is still above the 50. Okay, so we're still stacked overall on this. I think Adobe here got hit pretty good, okay, during this previous earnings that we had here. And again, what happened here on earnings? Well, they reported 5.4 billion. The estimate was 5.372. So we beat. Okay, so there was a beat on this particular. If we look at the earnings, okay, the estimate was 4.5. We came in at 4.6. So overall, they're doing just fine. They warned of some weakness out there, and that's what got them beat up. However, I think just where they are here lends itself to a really good opportunity to get in on a really good quality stock at this point in time. So I think looking at Adobe here is something to is something to look at. So I'm going to be looking at this also with potentially a leap or a naked put somewhere along those lines. In here, we're down towards the bottom of this Bollinger area that's been expanding to the downside. I mean, no doubt this thing has been, negative, but I think it's establishing a nice base in here. I like where it is. I think you can potentially put in a bit of a shelf here and get a bounce off of that. All right, last one, I'm going to give you a bonus. So that's 11 picks tonight. And let's give you a bonus one more. Let's take a look at copper. Okay. So I talked to members about copper. We've been playing it. We've been winning in copper. It's all good. Okay. And we've had some great trades in it. And then it took off. And it was just, to me, I wasn't going to touch this thing. However, I love the pullback the last 2 days. Okay. Copper, I think, goes higher with the China piece. If you're looking at the daily chart here, yes, we've been overbought, and now we're heading down from overbought territory. MACD rolling over. But if we're looking at the weekly, things look to be in full gear. So I think you can play this thing with a nice put credit spread, potentially just naked puts on copper. I would be okay accepting assignment even on copper. So if we looked at the copper futures, let's see, the next ones roll over on November 25th, and then the next ones after that, you're going to be in those all the way until probably March, it looks like. Oh no, it's not November. I'm trying to see if I can. Yeah, it goes till February. All right, so I think if we place something, now we can hold, if we got assigned on copper, we have all the way till February before we would have to roll out of it. So I think we could look at something like 90 days out into December, which would put us into that same contract that expires in February. If we were looking in December, I think on copper, you have a couple different opportunities. I think you have credit spreads. And I'm looking at like the 4 and 3.8 on a credit spread. It's going to pay us like $438. In fact, let's just take a quick look at it. This is the credit spread I'm looking for on copper. If you don't want to spread it, you can just do the naked put on it, okay, which is still fantastic. I think anything around here, around this 14, 12 mark, you're at the top of the Bollinger Band, or you're above the 21. So to me, I think I would want to be a little bit farther away, a little bit lower delta. It's a little bit higher risk trade. Okay. But at 4, if we took assignment at 4, okay, that would put us at the bottom of the Bollinger Band and the 3 ATR level, and it would put us below support, which I think there's good support at 406. So 4.06. So even you could go up to that 4.05, which is right where I think there's support for copper. I think that's not a bad trade. Okay? You're getting $938 on $4,100. If that's too rich for you, again, go down and write something, put a long down here. You could get even further away. Still make yourself a really great looking trade setup. So I think this setup is pretty nice as well. And I'm only doing this to reduce my buying power. If we fall all the way down to here in the next 87 days, I will then close out these longs for hopefully a winner. And I could move the longs in if you really wanted to. I could close the longs out for a winner. Okay, let's do a 30 wide here. I could close these longs out for a potential winner. If we came down here, I would take assignment on this, and then I would sell covered calls on it. And if I'm selling covered calls on copper, and we go about 30 days out, we have all the way till February to do this. And certainly we could be selling something in the, the 25, 30-ish range here. Let's take the 25s currently right now. Yeah, you'd be taking in about $1,200 per contract. Okay, so I think, and that puts you quite a bit ahead of where you are now, and put you outside of the ATR band. So I really like to set up on copper. I'm not afraid to take assignment on it. I think that would be something to take a look at here. Those are my trades. I hope this was helpful to you. A lot of different opportunities for you out there. Anyway, take advantage of what you're seeing right now. Bullish, but cautious. I gave you 12 trades. I don't even have enough fingers to do all of this. If you found this helpful and you like some of these trades, fantastic. If you want, in the comments, you can post your versions of the trades as well. We're going to be looking at these trades over the next several days this week. We got a big unemployment or employment number on Friday we're going to be watching. So maybe things will be a little tentative heading into that, but I still think bullish, but cautious, but take advantage of it now heading into the election. And then I think after the election, we get another rally into the end of the year. And then beginning of next year, who knows what's going to happen. That's where I'm more concerned as to what happens starting first quarter of next year. Is the Fed cutting too fast? Is inflation really under control? And if you get this longshoreman strike tonight at midnight, if the Chinese stuff fizzles, some of these things start to sell off, and you got earnings starting in a week or so, I think you got to be cautious here. I think you can't mortgage yourself to the hilt, but I think you find some of these key plays that I gave you and put them to work here. Trade small, okay? Trade often. If you need to define your risk, you can. I'm going to do a lot of undefined, but I'm also diversifying away from not just stocks, bonds, copper, oil. Some of those things I think all pay off for you. All right. Have a great rest of your evening. Watch some football. We'll see you guys in the markets tomorrow. Stay safe. Bye-bye.